And the Mad Paul Theron now joins me. Thank you, Paul.
I'm ready.
Are you ready? Goldman Sachs. So what's interesting is the loss of the overall company that they put out to the market. Exactly, quarterly loss isn't really what shocked the market. It seems what the market is talking about, the fact that they gained on the equities front, where you've got JP Morgan losing around 15% on the trading in equity. You've got Citigroup down 73%, and then Goldman Sachs up around 18%, and they say that it's because of fees, a massive increase in fees.
So they're trading well for others. Look, the Goldman stock price has been extremely weak. It's below $100. It's been crunched like all the other banks, but not quite as badly. These numbers, the first time they made a loss in quite a while, and this was a bigger loss than expected. So initially the share price sold off, but then some of the factors started to come through, like you say, better equity trading performance, and also people noticed that they'd really thrown the kitchen sink at their private equity portfolio, taking lots of write-downs. So it would appear as though this is kind of like the worst quarter in a while, and that in the quarters to come we'd probably see a rebound. So the stock's actually trading higher now.
So what do you think this means? We've got so many banks coming out with dismal numbers.
Well,
we've seen a bailout. Is this more of a reality for the banking sector, dismal and benign?
Look, they're still making quite big money, but the share prices are very depressed. People are worried about the global scenario of more regulation and all of that. There's some public and quite sort of overt issues around Occupy Wall Street, and everybody's hitting on bankers and so on. But to be honest, I'd say they'll probably be fine. And the question is, when will they get their mojo back from the market point of view? Because they're all trading on low PEs. I don't know about that.
So offering value right now. Do you have exposure
Yeah, but you could argue that they're going to be sort of showing depressed related sort of earnings for quite a while. So, you know, it's not as though they're entirely out of the woods. And we know even some of the big banks have had these trading disasters like UBS had. So there's still lots of drama going on under the hood. I don't think I'd be buying them even at current levels.
So what happens to rogue traders when they actually make a profit?
Then they get massive bonuses.
Oh, right.
No, we did cover this before.
Okay, so China, we're talking about the 9.1% dismal growth that has created jitters throughout the market.
Look, I know people carry on about China. China is the reason why everybody is excited about, you know, one story or stock or commodity market or something or another. But I just want to say, 10 years ago, China was this crazy non-economy run by communists where everyone was poor and nobody had any idea what was going on there. The fact is now they've transcended and transformed themselves into a modern consumer economy that's got a strong export sector. They've spent big on infrastructure. They now pay taxes. The social services have evaporated. They save like mad. They work like mad. It's now the world's second largest economy. It's the single most important economic trend in our lifetimes. So you've got to understand that that's very significant for almost every industry, and it drives everything from Coca-Cola through to Johnson & Johnson, even Goldman Sachs. You've got to be focused on what that economy is doing for us. Ah, yes, what's hurting? This is not looking after sheep and cattle in Duke's darkest KwaZulu-Natal. It's actually a very worrisome stock market investing trend, which will be discussed on Mad Markets at 8:30 tonight.